Welcome to Mad About Money. I'm Maddy Alexander-Grout, and this is the podcast where we talk about money. I'm here with Vix Munro, who is a money and wealth coach. She is an amazing lady. I'm very privileged to know her. She's also one of our Mad About Money app experts, and she talks about how to make money all the time, which is the best thing. So Vix, tell us a little bit about you and what you do.
Yeah, so as you said, I'm a money and wealth coach, and my mission is to help women create and grow wealth so they can live the lives they want. So a lot of women, my main kind of client group is women who are good at making money, but not so good at keeping it and growing it. So my focus is really on that. So that's what I do.
Amazing. And what's your background? What's your money story?
Well, my money story, well, it's a long one, but my money story.
We like long ones.
We like long ones. Okay.
Yeah.
So, and it's, it's all over the place, but it's interesting. So yeah, it starts back in New Zealand. So I'm from New Zealand, and my parents were very, very frugal. We had enough money to get by, but there weren't any luxuries. I'm also from a big family. So most of the time, because I had sisters that died, but most of the time we were a family of 7, my parents, and 5 children, although my mum then died and I had a stepmother as well. So I have a complicated family background, but we kind of had enough money to get by, no luxuries. And my parents were really frugal. And, I could tell you so many stories about things I do. Like my mother, one thing she used to do is, because she liked knitting and she wanted to knit us jumpers and stuff like that for the winter or whatever, but she never bought new wool. So instead would go to the op shop or charity shop, whatever you call it, and buy men's jumpers, unpick them, and use that wool to knit us jumpers. Because back in the day, op shops were cheap. My dad would do things like he would, because we had a local, we call them dairies in New Zealand, but a corner store, local shop, and he, instead of buying a loaf of bread every day, which we'd get through in a family of 7, he would drive to the bakery on a Monday morning and buy it direct from the bakery for the week, put it 6 loaves in the freezer or however much we needed, because it would save him money. He'd also do things like, we had a big chest freezer in our basement. And the other thing he'd do, he grew up on a farm. So he'd go to a local farm, buy half a beast, chop it up himself, and freeze it, and that would be all the meat we'd need for, I don't know, 3 or 6 months. So
wow.
My parents did lots of things like that. Like everything was done really, really frugally. So even to this day, I think my dad has a cupboard, which is, if something's on special, he'll buy it in bulk. Like if toilet paper's on special, I'll get a few of those because, I don't want to pay full price. So he still does things like that today. So I think that's interesting. And the interesting question is, do I do that today? For some things, yes, and others, no. Like, the shampoo I like, if either at the supermarket or Boots, it's often on special. So when it is, I often buy it in bulk as well. Because, it's a third off. I think that's going to save me money. But the things that he did, like driving to the bakery, I think, well, that just, time's money as well. Your time is worth money.
It is, so yeah.
It's things like that. So sometimes I do things like that, but more often than not, probably no, because maybe I rejected it or acted or rebelled against it. And I think also, like the 70s were tough years. There was big recession. There was the 73, 74 oil crisis. So, I'm aware from studying economics about how hard those times were. So I think they were hard times, kind of when I was, growing up. But I think one of the big things for my money story, and when I look back and think about it, actually, before I get onto that, there's also things like, which I grew up with, like not having much money for luxuries. It's like, I really wanted to go to ballet as a child, but we weren't allowed to go to ballet. We had to go to gymnastics, which was much, much cheaper. And I think my parents just thought, we've got 5 daughters, and if they all want to go to ballet, that's going to cost a lot of money. But gymnastics is really cheap. So they're all going to go to gymnastics. So, we need to go to gymnastics, not ballet.
And are you flexible? Are you flexible as a result?
No. I don't know if I would have been that good at ballet either. So, but
I did ballet, but the only thing I remember about it is one day before ballet, I was trying to talk to my friend who was at the bottom of the stairs. So I put my head through the banisters in these really old banisters, and I got stuck and they had to call the fire brigade to come and cut me out of a grade 1 listed building.
Oh,
They
no.
had to chop the stairs down because my head was stuck in these banisters like this.
Oh no.
So that's the only thing I remember about ballet, and I didn't go back.
Yeah, that must have been really traumatic.
Yeah, I think it was.
Yeah. And I think, you know, there are lots of things in my childhood where when I think back at some of the mindset stuff and where it comes from about, you know, we can't afford that. And, you know, people like us don't have that. But I think when I look back, I think, you know, when I was at high school, I did think there was a bit of a change to my mindset in terms of what I can have. And I think it's because I went to a school where I lived, the town I lived in when, you know, I was this age, there weren't any private schools. So there were pretty much 3 high schools, a mixed, a boys and a girls. So pretty much everyone who lived there, pretty much, unless they went to boarding school, they didn't really go to private school. And my school streamed. Now, I'm actually against streaming, but it actually was really good for me because I was one of those children that was very academic. And so I ended up in the top stream. So all the kind of other teenagers in my class, well, not all of them, but a lot of them came from quite wealthy families, and they had parents, mainly dads, but, you know, sometimes mums as well, who were lawyers and accountants and doctors. I mean, a couple of my friends, you know, both their parents were doctors. So that was kind of a education and how the other half lived. But also, you know, I was academic. I was also really good at debating and things like that. And there were like boys in my class at school who wanted to be lawyers. And I was thinking to myself, I'd make a much better lawyer than them. And I think it was that experience that made me think, I'm going to go to university and I can do all these great things as well. And I'm going to have a big house with a swimming pool because, you know, some of my friends or some of the people in my class, they lived in houses with swimming pools. And I thought, I can have that too. And I think because I was academic and because I did well at school, it made me think actually, and I was going to say lazy, but I was, you know, I struggled to concentrate, but I was lucky that I still did really well. ADHD, kind of like concentration issues and stuff like that.
Yeah.
But I was just naturally good. I had a natural affinity to things like maths. And because of that, I thought I can have all these things too. So that kind of helped me change my mindset in terms of what I could have. And I started to kind of believe, yeah, I'm born. Well, I thought about this later, like thought about now, like, yeah, maybe I did have I'm meant for more, and, you know, I'm born to be wealthy kind of attitude at that time. But so I did go to university.
But it's all in the mindset, isn't it?
Yeah, it's mindset. But I did go to university, and I then came to the UK and did a lot of travel. And I didn't actually I wasn't really that career focused until really I was about 30. And then I went back to university and did a master's degree. But I think the thing is, like throughout my 20s, I think I suffered from severe money trauma severe trauma, which had a big impact on my money. So my big trauma was when I was 11, my mother died. So I think that was really, really traumatic event. And I think and she was only 35, I was 11.
Oh, wow.
So I think when I look back, you know, on my life, I think when I was in my 20s, I just had this attitude, I'm here for a good time, not a long time. And I'm going to spend and have a good time. And I'm going to, you know, and I traveled a lot and I spent lots of money. And I did have a relatively well-paid job in the city because I'd done accountancy at university. So, you know, I did have money, but I spent it all. I didn't really have much to show for it. But interestingly, I've just listened to this book called Die with Zero. And it's really interesting because what he talks about, and I've said things like this, you know, the ideal life is to go out with enough money for an amazing send-off and you've actually enjoyed all your money. And wouldn't it be ideal? And then I heard about this book and I said, oh, I've talked about that. But obviously when people are talking about his book and what's wrong with it, one of the things they say is, what about, you know, generational wealth for your children? But he actually does cover that because he talks about actually give the children the money earlier because they need it earlier rather than inheritance when you die. And
so true.
And what the book is about, and I'll stop talking about the book in a minute, but it just links to how I live. When I look back now, how I lived my life, I think actually it wasn't such, the decisions weren't that bad. And I've only just listened to it. I finished it yesterday, actually, because I was in Wales. I went to Wales for a solstice event. Sorry, I drove back this morning. Solstice was yesterday. I only finished it. I finished it yesterday driving there. And what it is about is actually living a rich and full life. And sometimes you need money for that. So not scrimping and saving everything.
Yeah.
But basically managing your money. So it's like, yes, you can spend money on the things you want now and put away money for the future, which is actually something I talk about. And I call it your financial G spot, that sweet spot when you can have a good time now, knowing that you're putting away enough money for the future. But one of the things that was really key in this book is he was talking about your utility of money, which is kind of like the benefit you get from your money, and saying actually your utility of money is higher when you're younger, because, you know, when you're 80, you're not going to spend all that money backpacking round and do crazy things. So in this book, I was looking back and thinking, actually, yeah, I spent a lot of money. Okay.
But you had a good time.
I had a great time. And when I look back, it was really fulfilling. So, but I did later go into debt and stuff. But yeah, I did later go into debt because then I went back to university. I did a degree and then I did my master's degree. So I did end up going back into debt. And, you know, I do think I could have been a bit more balanced. Yes, I had a good time, but I spent money on things that actually didn't add that much value to my life. So yeah, the travel was great, but I spent money on other things that didn't add value. So I think I was, in this, you know, I'm here for a good time, not a long time. And it was only when I was 36, which is, I'd lived older than my mother, or I'd lived longer than my mother. I started to think, oh, I might be here for a while. Maybe I should, you know, start kind of getting my life in order. And it was only then that I started to think about, you know, investing for the future. So I was a late starter. You know, I talk about money. So I think I'm a good example of someone who didn't start at, you know, 21 or 20s. And so I was around 36 and I decided that I better start, you know, doing the things I wanted to do to make money and grow my money so I could have this house with a swimming pool that I want, and I could, you know, do the things I wanted to do. So I started in property, actually. So I bought my first rental property a couple of years later. I think it was a few years later. I think it was 1998. I can't remember. I'll have to work out how old I was when that happened. Or maybe I was 36 when I bought it. Yeah, I was probably about 36 when I bought it, actually. Oh, I've got to work backwards and count these things. And I bought
hard, isn't it? I'm like, how many years ago was that?
Yeah, how many years ago was that? Kind of mental calculation in my mind. So yeah, I bought my first rental property, and I'd recently read the book Rich Dad, Poor Dad, which I think came out around 96. And I think I bought my first rental property in 98. And also around the same time as the Rich Dad, Poor Dad book came out, they introduced buy-to-let mortgages here in the UK. So I was an early adopter, getting into property, and I had quite a few friends that were doing the same. And we'd read Rich Dad, Poor Dad, thought, yeah, the future is property, and bought quite a few properties. And then I decided, actually, I've got all my eggs in one basket. I'm going to start diversifying. I mean, I had a workplace pension, so I started to get more interested in that and how it was invested. And slowly over time started investing more in stocks and shares, and then kind of equity. I mean, so that is equities like gold and silver. And then in 2017, I started getting into crypto. I mean, I'm a big believer in crypto, whereas a lot of people in the money space aren't, but I'm definitely one of them.
I think it's really interesting, and we haven't actually really sort of touched this in the app yet. And I feel like it is a topic that does need to be covered a little bit more, because I mean, I'm not going to lie, I don't really know anything about crypto, but I believe that it is going to be a big part in the future.
Yeah, me too. I think that crypto as an asset class is going to be a big part. I mean, at the moment, there's thousands and thousands of different coins and tokens, and many of them will fail. You know, they just will. And but the crypto as an asset class, I think, is going to be, you know, that's the way we're moving. I mean, banks are going and governments are going into central bank digital currencies, which use cryptography. It's the same technology. And one of the reasons I love Bitcoin. I refer to it as the people's money because it's decentralized, it's not controlled by government, and it's not controlled by central banks. So it's the people's money. It's programmed in such a way that they can't control it. So I love that about it. So yeah, I do talk quite a lot about crypto, and then I'm just going to finish my money story with one more comment, and then we can move on to other things. Is I also have started investing, as you know, we've discussed this, in startups through SEIS or EIS, which is then an enterprise investment scheme where the government gives you some tax benefits, including a tax rebate if you invest in startups, because they want to encourage innovation. So I've kind of got into investing in startups too. So yeah, I'm big on investing. I'm big on having a diversified portfolio. And within that, I allocate a lot more to crypto than most people.
But I think that is sensible, because I do think that there is definitely something in it. How do you go about working out which coins to invest in, or like which funds?
Yeah, so I mean, obviously there's Bitcoin, which is, the
Big
the
one.
beast.
Isn't it really expensive to invest in now, though?
Well, it isn't, it's not. I mean, at the moment, I looked earlier today and it was around 23,500 for one Bitcoin. But what people don't realize is you can
buy partial.
A whole Bitcoin. I mean, one Bitcoin, I mean, a bit like a pound has cents, a Bitcoin has what's called Satoshis, or sats for shorts, and each Bitcoin has 100 million Satoshis. So, you can go down, you can divide down to one Satoshi. I'd have to work that out on my calculator to work out how much Satoshi is, but it's not very much.
No.
So you can buy 10 pounds of Bitcoin, you can buy 5 pounds, depending on where you're buying it and what the minimum purchase is, because there's also some fees associated with it. So
yeah,
it's more worthwhile. And it depends which platform you're using. And obviously then the next one is Ethereum. That's the next biggest one. But I tend to look at, I mean, there's so many of them. I mean, and, if you go on Twitter, because Twitter's where there's a lot of crypto talk in terms of the social media platforms, and people are touting all types of different things. But I tend to go for ones that have a use case. So they're actually being used already for something. And, I do also take a few high risk ones, which sound interesting. But I will say that the bulk of more than half of my crypto portfolio is in Bitcoin and Ethereum. And it was at one point like 70 to 80%. But obviously it varies, depends on how things move around. So
would you recommend then, rather than getting a savings account or an ISA, would you invest it in crypto?
I think it depends on the person, because it's I mean, I can't give investment advice, so
no I'm just I mean, personally, what would you do?
Well, I do both. So I have an ISA and I have crypto, and one of the things I talk about a lot, and I wrote a chapter in this book, Iconic Wealth for Women, about this. I talk about investing outside of the box, which is basically investing in non-traditional assets, because a lot of people in the money space will talk about traditional assets, which is stocks and shares and, funds and bonds, that kind of thing. I invest in those as well, because, I believe in those too. But I go further than that, and I invest in other assets as well, like property. Although some people would say now that property has probably become more traditional. It used to be a non-traditional asset. Some people, it's kind of in a grey area. Gold and silver, a lot of people will talk about that as well, but they don't tend to talk about crypto. I mean, financial advisors can't talk about crypto because the Financial Conduct Authority says they can't.
Yeah.
I also talk about investing in startups, but again, you have to, if you're investing through like the enterprise investment scheme, you have to self-certify that you're either a sophisticated investor or a high net worth individual.
Yeah.
But personally, when I think about crypto, one of the things I say a lot is, if you think about an investment portfolio, and I talk about diversification. So I personally believe every portfolio can take a small proportion or small percentage in high risk assets, say 1% to 2%. So say if your overall investment portfolio is worth £100,000, 1% to 2% is £1,000 to £2,000, which in the overall scheme of things is actually quite small. And I said this to
Yeah.
a friend recently who's asking me whether or not he should invest in crypto. And I said, well, I can't, give you advice, but what I asked him that question. He was kind of like, yeah, you're right. It's not 1%. It's not that much.
No.
Scheme of things. And it's just about, but it does depend on your risk level. I mean, for some people, they're very, very risk averse. They see crypto as being highly risky, and they just don't want to do it. And other people, I mean, I have quite a high risk threshold personally. And so I love it, but it is volatile. It does go up and down. And if you're really risk averse, you might like it when it's going up, but when it's going down, and when I mean down, it went down by about 70% from its all-time high. So, and that's a big dip. And for a lot of people, they get nervous, and so it depends on the person. But personally, I'm a believer. I think it has a huge future as an asset class.
Yeah.
And and the other thing is, it's not going away. Bitcoin has been around since 2009. Every time, and if you look at it, the prices over time, it's had, I don't know, I'm going to guess 11. This is finger in the sky, so I don't want anyone to say, oh, she got that wrong, but it's finger in the sky. It has dropped by around 60%, around 10 or 11 times, or dropped by a huge amount since in its short existence since 2009. But every time, apart from this current time, because it's still on catch up, it's recovered and gone higher. And we've got house prices, where there's all these talk in the past about house price crashes, and there have been house price crashes when it's dropped by, although usually it's more than 20%. It's not as such a high drop as with crypto. And house prices then always recover and they go higher. And I think that's the same thing with crypto. And it's a long game. I mean, some people get into crypto and think, I'm gonna make all this money in a year. I'm looking at it, I'm investing in Bitcoin. Like, I don't want to know what Bitcoin, well, I check though. I don't know what Bitcoin is, next week or the week after, or even in a year's time. Tell me what the price is of Bitcoin in 10 years time or 20 years, because I really do see that it's a new asset class, it's technology based, and I think there's going to be huge changes within the next 10 years. And then I think the price will be interesting. And if it goes up and if it goes down in between, then I try not to be that bothered.
Is it a good time to buy when it's low though? So is now a good time to buy Bitcoin?
I mean, I think I always say that, you can't what is it? You can't time the market. I just think if you're going to buy, just buy. And I say that with all investing, because people always say it's a good time to buy stocks and shares now. And I think when people ask that question, they're saying, is it going to go up next week? And I just think, the price today, it might go, you could buy today, it might go down tomorrow or the next day. But for me, I think that's insignificant. I just think that in 10 or 20 years time, the price this year is not going to be, that important. So yeah, I always say, it's really about, and I say the same with crypto, it's not about trying to time the market, it's about time in the market. And for me, that applies to crypto as well. It's a long game.
And are there any apps or sites that you would recommend to anybody who's just starting out in investing?
I usually recommend for people who are just starting out Coinbase, and for a couple of reasons. One, it has a really easy to use app. Like, I also buy in Binance sometimes, and every time I go on, I've got to almost reteach myself how to buy and sell, although it has got a lot easier. Coinbase is a really, really easy to use app. The other reason I like Coinbase is because Coinbase is a listed company. So Coinbase is the only crypto exchange that is listed on the stock exchange. So
okay,
yeah, it's the only one. So you can also buy shares in Coinbase if you want. And to get listed, there is some kind of, in order to be listed, I mean, everything gets looked at. There's more kind of regulatory control.
Yeah, there are.
Regulatory per se, but there's kind of more control than with an unlisted company.
Yeah, no, that makes sense. Well, that's useful. Have you ever done any Forex?
I've not Forex trading. Is that what you mean?
Yeah.
Yeah, no, I don't do Forex trading. I kind of invest for the long term. I have bought and sold foreign currencies sometimes. I mean, actually during the pandemic, I've bought some US dollars at one point, and sold them like a year later. But to be honest, because I play a long game mostly in my investing. I kind of think with currencies, it's a bit more short term. So
Yeah, that
I
makes
haven't really
sense.
I'm not really into foreign currency so much. I've sometimes bought some stuff and then sold it.
Makes sense. Yeah, I tried to get into it. We have got an app expert who's into it. It confuses the hell out of me. I go on like the trading 1 2 2 1 2 thing, and I'm like, no, don't understand that. It's just too many numbers, too confusing. For me, it's I love investing in small businesses. So I started my oh, my phone is ringing. Oh no, it's the bloody school. We're gonna have to bear with me.
Okay.
Hello. He's been sick in the classroom. I've got to go pick him up.
Oh no.
This is literally my life. Like, my child is sick a lot, and
Oh,
yeah,
no.
it's not ideal. Anyway, we've got 5-10 minutes.
Okay.
They can wait. They can wait. They're not interrupting our podcast. They can disappear. Yeah. So no, that's really interesting. But yeah, I started my small business investing journey when I was doing my crowdfunding for my previous business, because it was so hard raising money. And anybody who I saw crowdfunding after that, I was like, bravo, bravo, because it is the hardest job in the world going out as a small business and fundraising. So I just started to build my portfolio, and I've got about 25 companies that I've invested in. When I say invested in, I mean like 50, 100 quid, nothing like.
Is this through Crowdfunder or one of those platforms? Yeah, I use
Through like
Seeders.
Crowdcube and Seeders, yeah.
Yeah, I invest in Seeders, and I've kind of done small. I've got quite a few. I've got a smallish portfolio of ones that I've invested like 1,000 or 2,000 per company. And yeah, and there's actually, when you look at Seeders and you see all the companies are raising, there's some really interesting companies as well. But I've done bigger amounts outside of like crowd Seeders. But yeah, Seeders is fascinating. I agree with you. It's nice to support small businesses.
It is, and I've always been a true believer in like what goes around comes around. So I feel like eventually, once we've raised the amount of money, and we've raised our SEIS, I think I will do my EIS through Crowdcube. That's the plan, because it's quite good for raising brand awareness, and it's good for kind of collaborations and that kind of thing. We just need like 50% of the money committed before you can do it, which is difficult to get sometimes.
Yeah.
But it's exciting. It's exciting. And yeah, I think it's a good way of, it's a risky way of investing, because I think, you could lose all of your money. But then I invested in Brewdog like fairly early on. I think I invested like £25 in Brewdog. I bet it's worth at least 50 now.
More, I'd say.
Yeah, probably. I mean, I haven't checked on it for a while, but there are businesses that you think, do you know what? Actually, they could go really big. So it's taking a punt, and you can invest.
It is risky. I kind of, when I invest in startups, I look at it as though I'm a VC. So I'm not just investing in one. That's why I'm investing in multiple, because then again, it's a way of diversifying and managing your risk. And I think it's fine. If you look at the stats, I think it's 5 and 10 fail. So if 5 fail, if the other 5 don't, and you get a couple that, have a large return, then that balances out for the ones that fail.
It does, doesn't it? It does. And it's quite exciting. I guess it's a bit like gambling, but like a bit longer term with slightly more money, but potentially more returns.
Yeah. When I talk about investing outside of the box, because that's a topic I sometimes give talks about when I'm talking about investing in non-traditional assets, which includes startups, because it's private equity, I say, yes, be aware it's more risky, but with risk comes higher potential returns. But the other thing I say is there's a level of excitement about it, which I don't think you get in traditional investing when you're just buying shares in someone like Apple or Amazon or Facebook. There's this excitement about watching this, startup kind of grow. And yes, I've had some that have failed. that's fine. But I've also had some that have, you know, given me huge returns, and you only need a couple to give you huge returns, and that more than balances out the fails. So, and you know, and it's not all my money. It's only a proportion of my money that I invest in startups, because I also invest in stocks and shares and funds, and I have some bonds and, you know, other things like that, and property.
It's about that diversification, but also I think investing in startups, it's quite fun. It's the fun part, and if you do it early on, you can be involved in that business's journey, and actually then you know that you've played a part in helping something to be successful. So I think that's a nice feeling.
And some of these startups that, and I don't know what the proportion, it'd be really interesting to look at Seeders and say, but some of these will end up being a unicorn, you know, the $1 billion startup.
That's going to be mad about money.
Pardon?
That's going to be mad about money. I've got big hopes for it.
Brilliant. I'm excited for that as well. But I also, you know, one thing I say, and I'm sure I've said this to you before, is, you know, people talk about Facebook and how much Facebook, the company, or Meta now, sorry.
Yeah.
How much what the value of Meta is, or maybe Apple. And I think, imagine being in at the beginning. Imagine you got the opportunity to invest at the beginning.
Wow, I know.
You just held it for a long time. And, you know, as you say, you can invest small amounts, like £50. You can do that on places like Seeders. And you can just hold it for, you know, 10 years and see what turns out.
Yeah, exactly. It's very exciting. Well, if anybody is listening and you do have a spare 10 grand floating around, Mad About Money are taking investors, and we're very excited about our journey. And I would love to have conversations with people, so do get in touch. Vix, just after that shameless plug, what is next for you?
Right. Well, next for me. So I've mainly been working B2C. So mainly working with women who want to grow wealth. But one of the things I'm starting to do now is also B2B. So going into corporate, I'm going into some companies that I've had some previous contact with, and doing work on financial well-being, because I think a good way to reach people is through their employer. And so giving talks on financial well-being, giving talks on other areas that's of interest to them. So that's something that I've started to do. I've been working on that for probably the last 6 months, 3 to 6 months, to get that off the ground. So that's about to launch.
Nice.
Big thing. I have a book coming out, which is about financial literacy. It's going to be out in a few months, probably October. So that's 3 months, June. Yeah. My book's about financial literacy. So that kind of 2 big things that are coming for me.
That's very exciting. Well, we'll have to get you back on and talk about all those things in 6 months' time, and we'll see how your journey has progressed. It's been really nice to have you on. If anybody is listening to this podcast on Spotify, Apple Music, or YouTube, you are in the wrong place. You need to be listening on the Mad About Money app. If you haven't heard about it already, it is a brand new thing. It's very exciting. It is the UK's first ever social finance education platform. It's for entrepreneurs. It's to help people in your business journey, but it is also to help people with personal finance and their journey wherever they are with money. So go to the app stores, download it. It's completely free to download. And I have been, of course, I'm still always will be, Maddy Alexander-Grout. You can find me on LinkedIn. You can find me on the Mad About Money website, also TikTok at Mad About Money. And we will see you next time.